Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask you to hit thumbs up and subscribe. Questions, comments, put those below. I know obviously a lot of you guys follow me for my Vancouver real estate content. So in terms of that, I just put out the latest edition of the Saretsky report for October 2020. So again, if you want a 20-page deep dive PDF in terms of what's happening in the greater Vancouver housing market, I put a link in the description below where you can go and access that report for free. So that's my gift to you. But I want to touch this week on a video that I did last week, which got a ton of comments, a ton of feedback, some positive, some negative. But that basic video, that premise was on the currency devaluation, which is currently taking place. And I kind of had some of my thoughts on the currency devaluation as it pertains to why I said prices, the real estate market prices could move higher, at least again in nominal terms. So I want to kind of add to that video because I have to laugh is some of the comments, some of the feedback that came through in that video is people that were like, they were upset as if I had somehow become like super bullish and like some sort of like real estate shill because all of a sudden when the data changes, aka when you grow your balance sheet, your Bank of Canada balance sheet by 400% and you engage in $500 billion worth of fiscal spending, that shouldn't change your view on a particular asset class. I think that unfortunately that a lot of people get emotional. They get emotional because they want something to happen. They want a particular outcome as opposed to actually sitting down, looking at the data and saying, okay, should this change my investment thesis? Should this change my view of the world? Now again, when a global pandemic happens and central banks engage in massive, basically money printing by growing your balance sheet by 400% and engaging in massive fiscal spending where the two basically become married, you should think that logistically that probably has real life ramifications and logistically in some form or another that should change your view in some aspect. So again, some people are very emotional, and that obviously gets the best of them, and they're probably where they are at in their life because of that. So I wanted to quickly touch on this because I think that to kind of answer the question, why house prices are rising during a recession, I think it's important to look at it not that real house prices are rising. It's not. I don't want you to think that house prices are rising because people like the mountains and the water, or we're not building enough condos. I don't want you to think about it in that, the traditional mainstream terms. What I want you to think about it is in a currency devaluation form. So the fact of the matter is that pretend that it's not the house price, it's not the value of the house that is going up, it's the value of the currency going down, which is resulting in a house price that looks higher. So again, it's a house price that's higher in nominal terms. Since this pandemic, the Bank of Canada's balance sheet has grown by just over 400%. This is unprecedented monetary engagement. Now, fiscal spending on the government side. So back during the financial crisis, the fiscal deficit was about $55 billion for 2009, 2010, so just after the financial crisis. $55 billion was the fiscal deficit that year. This year, it is slated to be, again, give or take, we'll see what the check looks like by the end of the year, but you're looking at about a $500 billion fiscal deficit this year. So again, remember in the financial crisis, which basically destroyed our banking systems globally, where we were on the precipice of the entire system collapsing, the fiscal deficit in Canada was $55 billion. Today, in 2020, we're looking at about a $500 billion deficit. So again, and you say, well, wow, like who now is buying all this government debt? $500 billion in fiscal spending. It's the Bank of Canada, Maybe not directly but indirectly the Bank of Canada is basically married with the federal government, the Trudeau government, and they're basically supporting their spending habits. Whereas we talked about in last week's video, the Bank of Canada currently owns just about 35% of the government bonds outstanding, and by this time next year, they'll own half the entire bond market. So that is an implicit currency devaluation. Again, whether or not they come out and tell you that physically, literally, but all you have to do is look at the policy decisions that they're putting in place. This is an unprecedented currency devaluation that's taking place right in front of your very own eyes. And so again, people ask, well, what should I do? I'm not going to certainly give out financial advice, but there's plenty of information out there which should tell you that hard assets are going to perform well, precious metals, obviously, basically anything outside of a currency, any sort of global currency. Okay, so in Canada, the M2, the money supply, M2, go ahead, if you don't understand what this is, you can feel free to Google it. It's called the M2. It's basically the money supply in circulation. So the M2 in Canada this year is up just about 15% year to date. So the money supply, the supply of currency, is up 15% so far this year. I believe that the U.S. is up something like 20%. So you can see that these central banks, the reaction function is to flood the system with currency. So more currency in circulation, more currency that is basically been printed. Again, you can argue about the mechanics of it. It's not necessarily, we know that it's not necessarily money printing. It's basically you're creating reserves, you're creating bank reserves. But in essence, the fact is you're creating additional supply of currency. And so where does that currency go? What we can see is basically money velocity has been dropping. That basically means money that is turning over in the real economy, and it's actually just flowing into assets. So again, if you're a wealthy individual, even if you're, just an average Joe, like, do you think about this? Do you really want to sit there and hold your money in cash? Do you really want to put it into a savings account which yields zero, and sit there in cash while the federal government goes out and blows a $500 billion deficit, and it's basically just creating dollars out of thin air? So naturally, this money has nowhere to go, but it's flowing into real assets. So people are like, "Wow, the stock market's up. Worst economy in almost a century. Real estate prices globally going up." I don't understand how people aren't comprehending this. So again, put your emotions aside, and let's try to look at the facts about what is happening in the world. I don't agree with these policies. I think they're terrible policies. They're obviously ripping apart the fabric of society. These policies are not for me to decide. All I can do is sit here and say, I have my money, I have my own life that I can control. What do I want to do with my hard-earned money? Where do I want to put it? Do I want to keep it in Canadian pesos, or do I want to deploy it in, again, whether that be real estate, Bitcoin, precious metals, stocks, anything that's basically outside of that peso? So that's kind of, again, how I want you to look at it and frame it. So imagine this picture. So the bond market globally it's like the single largest asset class. So imagine now that you have, let's say, $100,000, and right now the bond market, the Canadian bond market, for example, is offering you 0.6% rate of return. 0.6%. Just so if you need to hear it again, 0.6% on a 10-year government bond. So the government is basically saying, give us your money for 10 years. Let me lock up your hard-earned money. Let me lock up your $100,000 for the next 10 years, and I will give you 0.6% back on that money. Why on earth would anybody even contemplate making that decision? It's so plainly obvious. Like, there's so many other things that you could potentially do with that money. Why on earth would you put it in there? So there is really no real buyer of these government bonds, and that is creating a result. So people are being forced. This is the idea of quantitative easing. It's to drive the yields, it's to compress yields, it's to drive the yields down, to push them down artificially, and that will raise the asset prices. It forces people into riskier asset classes. Obviously, real estate is a riskier asset. That's why you get a higher return. Stocks, private equity, precious metals. So it's pushing people into these areas. And that is why you have house prices rising during a recession. It is a currency devaluation. It is forcing people out of safe investmts. So that is how I'm looking at it. That is why I'm framing it up. And again, this doesn't matter who the government is. It doesn't matter who the politicians are. It's a system. It's an ecosystem that has been created. And until that system finally breaks, nothing is going to change. And obviously, we've come at the brink of that system breaking numerous times. And I suspect that it eventually will. And that it'll probably end up in what they're calling the Great Reset. But we're not there yet. So the reality is that it does not matter who the government is. So, for example, let's look at the policy decisions that governments are taking here in Canada. So they talk about, high house prices, unaffordability. Oh my gosh, it's so terrible. We need to do something. Look at the policies that these guys are bringing in. So let's roll this back now. The Trudeau government, which was brought into power in 2015. I want to actually roll back the tapes on Justin Trudeau's housing platform at the debates back in 2015.
To the next topic, and the next topic is housing. Mr. Trudeau, Canadians have been on a borrowing binge to buy ever more expensive homes. What would you do to guard against a housing bubble?
Well, the fact is, for many Canadians, their entire economic security is in their home. It's their savings, it's their retirement. And we need to make sure that while housing prices rise, incomes are rising as well. The middle-class Canadians believe that their jobs are giving them better and better salaries, that they can get raises. In order to do that, we need to create economic growth. We need to reassure Canadians that the economy is going to grow at the same pace as their house values. And that's not what Mr. Harper has delivered. He has the worst record on growth since R.B. Bennett in the depths of the Great Depression. But there are many other Canadians who are facing challenges around housing because they can't find rental housing. And that's why the Liberal Party has a plan to increase investment in home construction of rental units, to help seniors with the cost of their rents by increasing GIS, and by making sure that we actually give people the support needed to be able to get their homes and have that economic security.
Would you restrict foreign ownership of residential homes in Canada?
I think one of the things that we're seeing in a number of places around the country is concerns on that, but the fact is we don't actually have enough accurate data to understand entirely what's happening. And one of the reasons for that is Mr. Harper has chosen to cut the long-form census, and it leaves us with less understanding of the very real needs. The Liberal Party is committed to restoring the long-form census to ensure that we have the kind of data so that we can respond to local challenges like you speak of. What we need to be as a federal government is a much better partner to provinces and municipalities to be able to address challenges that are being faced in our major centres like Vancouver or Toronto, but also the challenges that are being felt right across the country for people who are struggling to buy their first homes, people who are struggling to find rental housing, and who need help to get that economic ladder to success that has always been there for Canadians but hasn't been over the past 10 years. That's what the Liberal plan to invest in the future of our country is all about.
So this guy campaigned on basically creating a stronger middle class, jobs, which would ultimately create housing affordability. And let's now just take a look at the chart of Canadian home prices on a national level. This is the Canadian Home Price Index since October 2015, when the Liberal government came into power. This is exactly where home prices are. Sky high. Affordability has not gotten even a sniff better. It's gone incrementally worse. And again, so it does not matter which government is in. Obviously, I understand the Liberal government was taking over from Conservative government, which also had a mandate to pump house prices. But now it's gotten to a level which is simply too large and simply too many people in it, that it is essentially akin to like a Ponzi that needs to continue to go. Otherwise, the system basically does no longer work. And so if we look at that, now we look at, say, okay, well, the Trudeau government is now coming out And I find it interesting to sort of see, again, not to get political, but the decisions that they've been making over the last week, which is we're going to ramp up immigration. We're increasing our immigration targets now in 2021, 2022, 2023 to basically record immigration growth. Because, the idea that obviously we understand that, again, immigration in Canada is almost Ponzi-like as well, and that it needs to continue growing. You need more. You need that growing tax base. You need those new FICO scores so you can keep lending new mortgages to keep the housing movement going. So. Not only that, but they also announced. So again, we're seeing now like the real economy where rents are falling. Rents are falling nationally because that's reflective of the real economy, obviously a pullback in immigration. So they're saying, okay, whoa, we can't have this. We need to now, we have just over 1 million people of temporary residents, students on visas, et cetera, et cetera. Let's fast track permanent residency for these people that are already here. We need to keep them here. We cannot have them leave. We know the economy is extremely weak, but we cannot have them leave. We need them to stay. Let's ramp up their permanent residency fast track. That's basically helping. That's basically like, again, whether or not they're going to come out and say it, but that's basically them helping to provide a floor under the housing market. That's basically them saying, like, we can't have more people leaving. That's going to weigh even further on rents. So let's keep them in. Let's then ramp up immigration. Again, nothing wrong with immigration. Canada is built on immigration, but you certainly don't ramp up immigration at a time when your unemployment rate is the highest it's been in several decades. Typically what you wait to do is you wait so there's less slack in the labor market, and then you start ramping up immigration because there's a shortage of workers and businesses need more workers to come in. But what you're doing is by pumping up immigration at a time when the economy and the labor market is extremely weak, you're actually just creating more labor supply at a time when there's not enough labor demand. So basically that's almost like a suppression on wages. So again, agree or disagree, not to get political, but I have to laugh because it doesn't matter who is in government. It doesn't matter if it's the Trudeau government. It doesn't matter if it's a Conservative government. It does not matter if it's the NDP. It's almost like these guys are tapped on the shoulder. They understand what it is. And these politicians, I think the sooner that you figure it out, the game is basically designed as such. So hope that video helped. That kind of frames my thesis on where I stand today. So I don't need to hear everybody's backlash, but I'm sure there'll be plenty of that, and I'll feel free to dish it to me in the comments below. See you next week.